Now let's take a look at a trade setup for a risk event of the week for the week starting Monday, the 26th of April. Justin McQueen joins us as ever from Daily FX. Justin, good morning to you. What are you looking at for a good risk event for next week?
Good morning, Jeremy, and thank you for having me on this morning. In terms of the trade that we're looking at the moment is on the euro, which has seen a rather impressive performance throughout the majority of the month, bouncing from the 117 handle to now just above 120 handle. And it has been interesting for next week. We do have a lot of EU data, but also US data as well. But the main focus will be on the April Federal Reserve meeting. Now, with this meeting, I must admit it's a bit of an interim meeting, a bit of a placeholder for the June meeting, because in June they will provide their latest economic projections. So it is a bit interesting on that front. And in terms of the April meeting, we're not expecting sort of anything significant from the meeting. We're expecting the Federal Reserve to stand pat on their policy, in the sense that they will continue to wait until they see strong economic data. Again, they are outcome based. So we're not expecting too much from the meeting itself, but it is a bit of an interesting stage currently for euro dollar. We have started to see a bit of a choppy price action. We're starting to struggle to see continued upside in the euro, starting to consolidate around this sort of level, around about 120.25. We did get to highs of roughly about 120.80, but just struggling to push through. We do have key resistance at 121 and handle the figure itself. But we have been encouraged by the fact that we've had a couple of times this week, we have seen dips to about 120, and we've started to see a bit of some dip buying from that 120 handle. And as I've marked up, we have 119.90, which has been a level of significance, previously resistance and now support. And for me, if we were to dip lower, I'd expect to see some support coming in from 119.50 and 119.28, which marks the 200 DMA. Only at that point, if we were to close below that level, would I suggest that pretty much the upside risk to euro dollar would be negated on a close below the 200 DMA. But for now, I'm sticking with the view that we can see continued upside in euro dollar. Again, we are seeing that catch up play in Europe with regards to vaccination rates, and we have seen a bit of a narrowing of the US Treasury spread, which has moved in favour of the euro in the past couple of sessions. So for the moment, I'm continuing expecting some upside in euro dollar, but again, we are consolidating at these levels, and it will be key if we can break above 120.80 and 121 the handle for this continued upside in euro dollar.
Great. Okay, Justin, look, we'll leave it there. Thanks indeed for joining us. A risk event next week, looking ahead to the Fed interest rate decision on Wednesday, 7 p.m. UK time. That's Justin McQueen from Daily FX. For more videos from us here at IGTV, join us on Twitter at IGCom and subscribe to our YouTube channel.